Good morning, good morning, good morning to Lottie, Dottie, and everybody. This is Tim Davis again coming to you from the Bullish Bears team. And today is Tuesday, May the 10th. It's now about 6:28 a.m. And I'm up early again. I'm off today actually, but I have a dentist appointment around 7:30. So I wanted to point out some things to you guys before I left. Also wanted to thank everybody for joining me last night on our first webinar, the Bullish Bears team's first webinar, guys, first live webinar. I really appreciate everybody showing us so much love and showing up and seeing what the market has to offer us. Okay. This morning, you guys, I want to point out something real quick. I looked at pre-market this morning, and as of right now, I'll show you as well. It's showing that it's rising. I'm looking at the wrong one. Actually, I'm looking at gold. Well, gold is also rising. I'm looking at the wrong one, but gold is also rising, you guys. Look at that. Gold is rising, trying to rise again, and I think it will be successful. Matter of fact, well, I just noticed this. I didn't see this morning when I first looked at this. Looks like all the commodities are on the rise at the same time again. Okay, so I'll keep that in mind this morning. But look at the major markets. Look at the major markets, you guys. Look at the S&P 500 futures. It's showing that it's rising as well. Okay, so far in the futures, it's rose $12.25 for the S&P 500, 6% rise. The Nasdaq also is showing a rise, $24.63 right now, 57.57%. As I told you guys yesterday, I had no faith in these rallies that the market is trying to assume because it's a fake out mode. It's going to fake people out to make them think that I can trade this thing long term. I can trade it bullishly long term. Don't fall into that trap. You can trade it bullishly short term and only short term. Okay. One things that you can trade long term, and I tell you, and you'll be fine, is these commodities, you guys. Gold, even though it had a huge pullback, over the past several days, or the past week or so. But it's in general, gold is trending higher. I showed you guys yesterday why it's trending higher. Okay, and you're gonna have pullbacks. Gold was as high as gold got up pretty high over the past week or so. I think it made up to like 2080, and I can't remember if it took out that 1300 high. But it probably bounced around in the area and then decided to do a pullback. And as of right now, it pulled back to as much as 1267. If it continues to rise again, it'll probably get to that 1300 area and probably take it out and go higher. All right. So now that I showed you guys this. This is a pre-market as of right now, and like I said, it's about 6:30 a.m. Okay, and futures are rising higher. S&P is up right now, 61%. It's going up a little higher. All right, now look at the charts that I'm looking at another chart that's pretty much broke down yesterday of the S&P. I'm looking at a daily chart right now over the past 5 months. And I'm gonna point out something to you guys to tell you that this rally that you see today, it's good to trade short term if you want to get some short term calls on something that you can find that's trending along with the market. You may be to trade up, but you gotta be in and out because if you're not in and out, you're going to get stuck like everybody else who believes that this market will go higher. You'll be stuck just like them, and you'll be wondering what happened because you saw the market rising today, and then hours later you see it starting to fall. We are in that area, you guys, of strong volatility. I think we're going to see some strong volatility maybe this week, maybe next week as well, until this market finally decides that it can't go higher, and then it'll roll over and start to go down. Okay, so we're going to continue this volatility that we're showing right now, which is a good time to catch some quick puts and calls, on a particular stock that you trade on a regular basis. Because if you put a string on some of these, you can catch money on the up and down side and kill this market. But you got to know how to do it. All right. So as of right now, as you can see, I showed you guys yesterday that within the cloud system, you have moving averages lines. There's one of them, the blue one, which is my short-term moving average line. Okay, which is this blue one that's riding up here. That's my short-term moving average line. And as you can see, this is a 9-day moving average line. It went up so far, and then it came down across, finally crossed over the longer-term moving average line, which is the red line, and that's the 26-day moving average line. It crossed over right here, and now they're pretty much riding together there. Okay. When they cross over, that pretty much means that the one that's taking the top position is the one that's pretty much going to take over, and it wants to take over the top position and take control, which is the red one. And all that means is that this market is going to continue to go lower as long as these lines continue to stay crossed, and the blue one stays on the bottom, red one continues to rise, they'll go lower. But as of right now, you see the market rising. So this blue line may even go up a little bit more and may take the top position again. But we're already in this downward channel, as I showed you guys yesterday. We're already in this downward channel right here. We're already in this downward channel. Oh, let me get something else. I don't like that. We're already in this downward channel. So I have no faith in the market because the market already turned up here and it started and trading in this downward channel. So as long as it's in that downward channel, I have no faith in it. It has to break out of this downward channel for me to believe that the market can continue higher and create a new bull market. I don't think it has enough strength and enough momentum to do so. All right, so with that said, we are currently at 2066, where I showed you within the investing.com app here, and I showed you that we're at 2066 and it's still trying to go higher. But I think it's going to be very weak. It's going to be a very weak turn in an attempt to go higher because it has to deal with certain areas of resistance. Certain areas of resistance it has to deal with. It's going to have to deal with this one right here. Let me show you. It's going to have to deal with this one right here, which is around this 2171 area. So it's going to have to deal with that area. So as it's going around, it's at 2066. If it gets to this 2071, it has to break it and go through it. Then if it does that one, it has to get through this area right here, which is about 2080, close to 2080. It had to get through that area too as well. Okay. And then in order for it to go higher, then it's going to have to get through this area as well, which is about 20, about 20, somewhere around between 20. I'll just change it and make it to 2100, which is I told you guys before. That's the highest it got on that particular week, 2100. So then it has to break out that level. So right now, this is what the market has to face this week. Okay, it's going to have to face, if it wants to continue higher, has to face all of these levels of resistance. Okay, if it successfully breaks through these areas, which I highly doubt it will, and then it'll have to contest with this area up here. Okay. And as I showed you guys the other day, it already tried these areas and it couldn't make it. It tried, to bounce up and raise past 2100, and it did so unsuccessfully. Okay. The market got as high as this area up here. And I want to say that was back on 18th of April. And then it started to trend down. And every time I did a turn, like it did a turn here, because got some green candlesticks there, and this is a daily chart. Try to go higher, it couldn't sustain it. And what does it do? It comes back, it falls back down. Fall back down. Okay, now you go over to this green candlestick here. It tried to go higher again. And that was around the 1st of May, somewhere around the 1st of May. And it couldn't sustain that either. So it fell for several days. And it came down. And now we are right here. And we were right there. That was probably yesterday. Yep. It rose up a little. Could not sustain. I mean, it went up a little. Boom. Fine. Then it went up a little bit more here. And now today it's going up a little more. It's around probably like 2066 somewhere. Okay. So this is where it is. It's forming it's like a little cup. It has to break through these areas, you guys. So that's why I say I look at these charts every day. It has to break through these areas, so I would have no confidence in trying to trade this thing bullishly, unless it's a quick hit. But when I say quick hit, I mean you got to really find something that's moving in order to get a nice amount of money out of this. If you trade in the S&P 500, you can get a good move out of it. But if you trade some of these other stocks, you guys, unless that thing is really showing you a good up movement of $1 or $2, You want to make that dollar too quick and get out, because if you try to make more, you're probably going to run into a problem where it's going to fall down on you. Okay, I wouldn't definitely hold no call overnight. Puts overnight right now, I probably would do it, depending on what you're trading, because all puts are not alike. So you got to look at your position that you're trying to trade, whichever it is, whatever company it is, and you want to chart that particular stock out for a time frame. You want to chart it out for a day, and then out to a week. We want to chart it out to hourly, and you want to look at it over time, so you can get a general idea if it's in a downtrend or an uptrend. And then after you do that, you can determine which one you can go long term with. If you can go long term with a put or a call. Right now, I have 2 long-term puts. Actually, not long. It's about over. I got like 45 days on them. I have a put for Netflix until June 17th. Then I have a put for a symbol called AKS. I have that one out to June 17th as well. I have one call right now, which is MJNA, medical marijuana call. And actually, that's not a call. I'm sorry. I bought shares of that one. I have 2,500 shares of that one. And I'll probably have that for a long time until it shows me some pretty good increase. I got some faith in this medical marijuana thing because of what's been going on with the government trying to legalize marijuana over the past year or so, and with certain states already have it illegal to where they can actually dispense marijuana in some local stores. So I said it to say that marijuana looks like it's going to be with us for a while. Looks like it's eventually going to make it to whereas it'll probably be legalized nationwide. I mean, honestly, that may happen. And with these medical marijuana discoveries, as far as some of the cures that it can actually do and actually does, it's really giving some people some confidence that it can be used widely as a new medical tool for pharmacists and for doctors. So I think medical marijuana has a bright future ahead. Okay, so I bought shares on that one. So that's what I have going on for today. Keep a look at your positions, you guys. Whether it's calls or puts, definitely keep a look at that. You may want to add some gold in order to balance your portfolio out if you have not added gold yet. Long-term options on gold, and be careful trading these markets bullishly. Okay, if you're a day trader, you know how to do it. Trade it bullishly, but you want to do short term because we are in this downward channel. I showed you guys in this downward channel. Even though the market like it wants to rise today, it has to break through. It has to break through these levels of resistance in order for it to really take out and go higher. So I have no confidence in it really being able to pick up enough momentum to break these levels of resistance. So that's why I am thinking long-term puts and gold. That's my thought process over the next several months or so. All right. Okay, you guys, that's all I have for you guys this morning. I will catch you guys when I get back. Remember to follow us on a regular basis at bullishbears.com, which is our website, which is still under construction, you guys. Some great things are going to come from that website. So continue to follow us there by punching in your email. You can find out just updates as far as what we're working on. Also, follow us on YouTube and follow us on our Facebook page. Continue to send your family and friends and lovers that you care about to follow us, because we will continue to teach and show people how to protect your wealth, and create good health. Okay? All right, you guys. See you guys on the next video.